And once again, good morning and welcome to the weekly life insurance training webinar sponsored by your Messer Financial Organization. And again, Mark Conter here with you. This morning, we're going to continue at our step-by-step procedure with the life insurance sale. And last week, we reviewed the documents that you would be needing to gather information. Basic health questionnaire. We also discussed the use of the fact finder, and from that fact finder, we were able to begin to get an idea of what direction we wanted to take with the client. So what we're going to do today is simply go into the quoting tool that is available on the Messer website to work on this case, which again, we're trying to keep things pretty simple here to start with. So we're going to start with that very basic, simple quote. And first and foremost, if you want to on a separate screen, if you have that availability and you want to go over to the Messer website, and as you'll see it on the screen, and can you assist me, Rebecca, with our very first polling question, please? And as you're aware, this is a tool that is available on the Messer website. And I'm just trying to get a feel for the people that are participating today in the webinar. How many of you are familiar with it or have used it in the past? And with approximately 80% of the participants having voted, we'll close the poll. And the situation is about 60% have used it and about 40% have not. So not only with the very basic part of the tool, but hopefully we'll be able to give you some ideas of some things about the program that you may not have used before. And once you get on that Messer homepage, let's see here. You'll note on that homepage on the lower, about halfway down the page, you're going to see a place where it says quote engines. Other links that you'll see that are available that are resources for you as an agent. But today we're going to focus on that first and foremost one of the quote engine. And simply all you're going to need to do is click on that link. And once that link has opened for you, you're going to scroll on down to the section of that link that is for life quotes. Also, what's going to happen when you open this up the first time, if you haven't been familiar with it, you're going to see, and this is just a piece of the puzzle here, we cut out the health insurance, the Medicare supplement, hospital indemnity, another tools that you can use in addition to the life quote. Further down on the page, you'll see the additional tools that are there. But again, today we're just going to simply keep it and focus on the life quote itself. So once again, you're going to need to click on that verbiage there, health or life quote. And I hope that you have in hand one of those sample health questionnaires, either one that you did on yourself or the one that we've been working with as a sample for our clients, the Andersons. And with that health questionnaire in hand, and again, if you don't, you will work off of the one we have been working from in the past webinars. We'll go to that tool that'll open up, and it's very basic. Again, most important, as always, is starting with the date of birth for that individual. And once you populate that date of birth, it's automatically going to give you the age last and age nearest. So that box will fill in based on the information you provide in today's date. Obviously, again, with our client, we're going to pick that gender, the state of, I want to be careful with that. When you write a life insurance application, which can commonly happen here with us in Charlotte, you may be an agent in North Carolina and your client might be in South Carolina. Basically, with health insurance, it's where you sleep. With life insurance, it's the state that you actually write the business in. So as in my case with an office in Mint Hill, if I have a client come up from Fort Mill and meet in my office, I'll write that application on a North Carolina package. If I go to their home in Fort Mill, then I have to be prepared with the South Carolina application package. And of course, obviously, I have to be appointed in that state where the business is going to be written in order to be paid. We'll fill in the box again with the amount of insurance, and we'll be able to determine from the payment option, the drop-down box is there. You can simply click on it and choose whether you do want to have a monthly on a banking draft program, or if you want to go quarterly, semi-annually, or annually. For the simplicity of the presentation at this time, we always want to work with that guaranteed, non-guaranteed versus the simplified issue. And then you're going to need, importantly, to choose from that the exact amount of terms that you're looking for. On this client, we're going to simply work with that 20-year term here today. And again, on this snapshot, one of the things that you'll note in the desired term is the guaranteed UL. Now, we won't be working with that product today, but just so you know it, this tool will allow you to go ahead and quote a GUL. And I've made the statement before, the typical guaranteed UL is nothing more than a glorified term product that never expires. That's the simplest way to consider it. Now, again, this is not an index product. This is just a guaranteed UL, meaning that as long as you pay the premium, which will stay level, just like a term product would, the death benefit will continue to exist all the way through the date of that guarantee on that UL. Now, I also bring that up in a word of caution, because if we were to use that tool today and open up a quote on the guaranteed UL, you would see a number of carriers populate, and you would see a number of guaranteed UL products out there that would say age 90, 95, 100. Well, those are actually like the term product in years, except by age, to designate a time that that product would exist as a benefit to that client. But should they outlive that benefit, just like a term, the guaranteed product would have fulfilled its contractual obligations and would expire. So you need to be careful that you just don't go out and run guaranteed UL quotes and choose the simplest or the smallest price, because it's probably going to be a 90-year UL. And if, again, the party lives until 92, 94, they're without insurance again. I'm going to say, as I have in the past with different carriers we work with and different products that are available, my personal feeling is I like to work with the North American GUL, and the reason being that their product allows the client to pay to age 100, but have a guaranteed death benefit until age 120. So even though they stop paying at 100, the policy remains with the death benefit for them to all those years following. So again, be careful when you look at that. And I'm also going to give you one other very important note on a guaranteed UL. Well, actually, a couple of little items. Number one, there are fewer and fewer companies writing them. So again, being particular to the carriers, as you can see in the box on the screen now at the very bottom of our snapshot, carrier products, you can customize. I'm not going to go into that with you today, but you can actually choose from that customized carrier list the carrier and the product that you want to populate on the screen when we actually get the quote. But the most important lesson I can give you from personal experience on the guaranteed UL is that when you write that product and you put that client on a bank draft program, which obviously is the safest for you as the agent and for the carrier to make sure the premiums are paid in a timely fashion, you need to make them very aware that if they should ever change bank accounts, they need to make that banking change immediately with this carrier on that guaranteed UL product. Because once a premium has been not paid over the 30-day period after due date, a policy will be terminated. And there is no exception to that. They will not go back and reopen the case. And obviously, the worst thing that could happen is have a client written on a guaranteed UL that they've been paying on for 20 plus years. Obviously, their health has changed. They're older. They probably wouldn't even qualify again for the product, and certainly nowhere near the price that they would have paid on that original product 20 years previous. And because they missed that payment and they go beyond the extended grace period, the policy ends. So very, very important to keep that in your notes, keep that on your head. Anytime you're presenting a guaranteed UL product, that at the time you close out on that, deliver that policy, that you really try to pound that into their minds, not to ever change that bank without letting the carrier know at the time that they do. Okay, so enough said with that. There's a section we're going to take a look at here in just a moment, because again, the snapshot we had was only part of the page when you go to that quote tool, and that is going to be on the waiver of premium. And again, as an example of what we had talked about in the quote that we were building for the case, we want to try to do that, especially with the younger families, to make sure that that product is going to be protected in the event they should have a need to stop working from a disability standpoint and still have the premiums paid. So again, in the rider context, you've got a number of options. You've got that accidental death benefit, ADB. Don't see much use of that today. I think it's a glorification, obviously. Basically, accidental death benefits are designed to add an additional death benefit, oftentimes equal to the original policy value until it exceeds 100,000. In the event that a death should take place by accident, that the policy will basically pay twice. Again, the waiver of premium is what we do want to work with these clients. It's fun to go in there when you just have time to play with the quote tool itself and run a term quote and ask for return of premium. You'll get some very interesting results. You'll also find that there is a very limited number of carriers that will even provide today the return of premium. That was sometimes used in the past, basically as an agent selling tool, kind of the same way we're going to work with living benefits, in all honesty. In the early days of selling life insurance, I shouldn't say early days, but let's step back about maybe even just 10 to 15 years when everyone out there had their term product and an agent needed a slight edge. They would oftentimes ask a client if they had the new term or the old term product. And again, that was just kind of an eye opener and awakener, and the client would have that question in their mind, what's the difference? And they would ask the agent, and the agent would go ahead and proceed to show them a return of premium term product so that they could get their money back in the event that they paid the premium for the 20 years of the term and were still alive. At least they got their money back. Obviously, there was no gain. It was just a refund of premium paid. It did have specific guidelines and still does. You don't get back 100% of premium unless you pay 100% of the term of that contest itself. So it's a benefit that's out there, but today probably isn't going to see much use, very, very, very seldom. And when you run the quote for fun, what you're going to find is true extremes. I'm not going to name carriers by name itself, but 3 carriers that come to my mind that'll populate with the return of premium option. One will be at a rate that will be significantly higher than the premium itself would have been without that rider benefit. The next one will be probably twice as high as the premium that you saw on the basic term product. And the third one will probably be as high as 4 times. So it's not something that companies are really thrilled about doing. And I think more and more are getting away from it. I think the day will come that it'll go out to pasture. But again, what we want to keep in mind is the selling technique that was used is still a technique you could use today, but more frequently today, again, taking that same thought in mind, we are asking our clients when they tell us that they've got a term product, do you have the new term or the old term? And today what we're doing is we're going ahead and alluding to the living benefits that we're going to discuss in greater detail in one of our future webinars. But again, a product that we want to use, what we were using actually as we started the entire training when we were doing canvassing via the phone or doing some letter work and follow-up call work to set appointments. One of the things we were doing was trying to use that living benefit as a door opener. So if you go back to our past webinars, if you haven't already or didn't attend them originally, and check out some of the means that we used to develop business leads and how we use that living benefit as part of the new business to get people interested in hearing our presentation. Okay, also up here in the rider box, you can see the child rider units. And I can't do it on the screen again because this is just snapshots, but you'd simply click on the down arrow. It's going to open the box and it's going to list 1, 2, 3, 4, 5, 6, all the way down in numbers, down to about 50. And what each number stands for is $1,000. So if you click on 25, you're adding 25 units or $25,000 of child rider benefits to that policy for one of the individuals. I do want to make note of that as well. When you do a child rider, you cannot put, let's say you want to do 25,000 on the child, you can't put 12 on the husband and 13 on the wife. The companies are only going to accept it on one. So please go ahead and just select for either the husband or the wife. Commonly on my decision, what I do is I run these quotes just quickly for myself and I see what the premium is going to be, and I'll add the child rider to the lower of the 2 premiums, whichever it happens to be, the husband or wife, on which again will be based on their age, based on their face amount, and based on their table rating. So we've talked about that before in our classes on underwriting, how you are going to have the opportunity by gathering that information on that health questionnaire and doing some basic field underwriting using the tools that we provided you with, the actual underwriting guide that is used in a lot of respects by the underwriters behind the scenes, giving you an advantage on that. So if you want to refer back to that webinar, that's also going to be found on that Messer website when you go to the agent resources, and you'll find that past webinars or training modes, and you'll be able to listen to any of that information as well. But again, for today's purposes, we're not going to use any table ratings with our client. But if we had determined they did have it, and again, we'll give you a basic one. We found out that they're diabetic. Doesn't matter whether it's insulin or pill related, but they have that diabetes. It's part of their medical information bureau information. They're going to be a table B. When you would hit the drop down box, B will be one of your first listings, and then they're alphabetical from there. Again, using the tool from the guides provided on underwriting, each individual time that you come across an existing condition that's causing a table rating for an individual, that's like an add-on. So if one case says that diabetes is table B and the height and weight chart put them up to a table C, you don't take the greater of two evils and just underwrite at C. No, you take C plus the B, so DE. So a DE rating would have to take place for that overweight diabetic situation, which in today's world is not uncommon. Flat extras, as you get more experienced, you're going to find that due to some conditions or some existing situations, the insurance company chooses to pay or charge an additional premium, and it's usually done per thousand based on a dollar amount. And the situation might be when they look at their vehicular information and find out that they've had numerous speeding tickets, they might consider that client a little bit higher risk due to the number of those tickets. And they might say, hey, we want an extra, they'll say on the offer from the application that you've made, a $5 per thousand extra. Well, $5 per thousand extra is quite a bit. If you think of $100,000 policy where they had that $5 extra, so that's $5 per thousand, which is 100,000. So $500, and you would divide the 500 then by the 12 months of the premium, and you would be adding on $41 to the premium for that $5 extra. So it'd be quite a bit, just to get another piece of information. We're going to select the health quote or health class, and what we're going to do again based on our work today with the simplicity of our presentation, we have a client that is going to be non-tobacco, and we're going to be looking at the preferred best rate. No, we're not. We're going to look at the preferred non-tobacco. Again, I've tried to emphasize in the past, no matter what you hear from your client, no matter how well you think they may be health-wise, avoid ever quoting preferred best. If you're very strong on their feelings and you feel they will qualify better, use the preferred rating. Obviously, if they do get a better rating from the underwriter, the offer will be better with the preferred best, because again, what we're trying to make sure when we choose that health class, we never put ourselves in the precarious situation of getting a quote, presenting it to a client that winds up being far less than the underwriting comes back at, and the difficulty of selling that policy now with a higher premium than had you taken the liberty of making maybe the health quote a little bit less of the risk, had a higher premium in the quote, got back a better result with the return of a better health rating and a lower premium, that pretty much eliminates your problems at closing. And a lot of life insurance sales, I find, you don't really need a lot of closing tools. You don't need a lot of responses for problems and questions if you do your work right to begin with. So the more you can do to eliminate any of the objections, obviously, the easier it's going to be for you to take that order. And one of those always is to make sure that the quote you have is either accurate or the quote you provided was higher than the results that you get. That makes it much easier to go ahead and sell. When we're looking at, again, these pages, I mentioned that on that table rating, you're going to do that drop down arrow, and you're going to be able to determine that from the homework you did on the underwriting. So here's our case. Here's the gentleman that we've been working with. Same birth date that we've used in the past. He's 35. He has not hit that 6-month factor at the time we did this here in the month of May. If we get out to July, August, and we were doing the same gentleman, he would show age last at 35, but his age nearest would bump up to age 36. And of course, what that would be is the majority of carriers are going to make their offer based on a 36-year-old individual, not a 35. Pretty much last week, I asked you to go ahead and do some homework yourself if you were with us. You should have worked on this information, provided $1 million for the gentleman. Again, we were going to do a monthly premium payment. We chose a 20-year term. Reviewing my notes, I noticed that I didn't give you a desired length of time. So if you did your homework and you put in a 30-year term, which is fine because it's a young individual, 35, protecting them up to age 65. But the premium, of course, that you're going to have develop is going to be higher than that I used in this case study by using the 20-year. At this particular age, 20 years is good. We know they've got children. We found that out. We're going to see that in our discovery work here again. But if we use a 20-year product based on the age of these children, we're taking them into their early adulthood, and we're avoiding the problem of not having the security that we were trying to develop with this product for that client, because the kids are old enough that they don't need it as much. So I would be very safe on a 20-year basis with the 35-year individual. Again, as we're looking at it, we could go ahead and customize, but we're not going to customize today. We're just going to let it hit and tell us about all carriers. You'll see that in just a moment. So on the second part of that screen, again, the snapshots didn't allow me to bring the whole page up, which is probably better because you've got a better view of it here. We added the waiver of premium. But on this particular case, I did not add the child rider. And the reason I didn't, as I explained, was I tried to do a comparison early, and you're going to see how we've added that child rider benefit to the spouse, the female, rather than to the male. Again, we've placed him in a preferred non-tobacco rating. So again, we've gone ahead and made the selection in the health class. And once we got to the bottom of the page and completed all the information, all we need to do is hit view all quotes. Now, if you miss something, not if you miss the waiver of premium, it'll give you a quote without it. But if you miss some pertinent information, if you miss that birth date, if you didn't choose the mode of premium payment, it won't run the quote. It'll just be there dead face to you. So you'll always be able to go back and review it. But at this point, we've completed our work. We hit that little box, view all quotes. And just as fast as you hit it, on something that's simple, the options are going to populate. Now, what we have here today, and this is just as it would have been on your screen as well. If you're doing it on the side, you should have the same answers. Again, this is a snapshot of the quotes that came up. This probably had at least 15 or more carriers quoting this opportunity, but we're looking at them from the least expensive premium to what would have been the highest. And on the highest, what it would have been, on all honesty, was one of the carriers would have automatically populated a return of premium, and you would have seen the cost of offering that return of premium option. Now, what we've done is we've gone ahead, and it's right here on the side when these come up, you put a little check mark in those that it shows, because the screen actually comes up to begin with as a white screen, no background color. But as you highlight them or choose them in the order they came up, they're going to turn yellow. And so basically what I'm saying is the original page opened like this. And of course, as the snapshot allowed me on this page, that we have 4 carriers. You saw the SBLI, the AIG, and the Banner, but here's also the Minnesota Life. A nice benefit to these particular short statements is there's information here for you. As an example, if you have a client that's hesitant and doesn't want to do an exam, SBLI is telling you that, hey, we'll work with this with no paramed exam, because the face value is less, or not in this case, they won't, because the face value has to be less than 500,000 or greater than 100. So this would be non-applicable because our client is going to be $1 million. And then it does say that some application necessitate additional underwriting requirements. So it's just a little benefit that they're offering out there for agents when you're writing less than 500,000, that you can avoid the exam session itself. Some of the other notes, as you can see, if we get down to Minnesota, they let you know that if the face amount is less than 250,000, which in this case it is not, it would require you to use the Quick App or e-app type of application. And then it does show that waivers may vary. A lot more detail on the actual underwriting. And not for today, because we're going to get to that in a presentation not too far down the road, is going to be the actual application process. And you're always going to have the option that you can go ahead and take a paper app, or you can use electronic for most carriers. Now, again, when you're looking at the SBLI, you'll note that they do not have an e-application on this particular iPipeline quote tool. And it just has to do with a matter of registration. If you do like SBLI, if that is a company that you're working with going forward, you'll find that if you use the resources on the agent tool and go to that company direct off of the Messer website, that they do have a freestanding e-application available to you. But again, they did not do contractual terms, is what it comes down to, or pay a fee. That's what it really comes down to the iPipeline quote tool system in order to have their product put on that pipeline for electronic applications. So they have it, but it's not as convenient based on this particular quote tool. Hope that wasn't too confusing. Back again with the product itself again, we've got a 20-year term at 100,000. And you'll note that again, we've got the premium of 7166. Let's kind of step down to the next one down, because again, I think I've talked to you before. One of the companies that we do lean towards shows that a little financial breakout here. The actual life policy is $51.38. That's what they mean by base. But because we added the waiver of premium, that's what your WOP is, to protect this policy, it increased that premium by $10.28 a month for that $61.66. Now that's a good tool for you. It's done in such a way that most clients, if they were looking at this, wouldn't know what that meant. If you're brand new, it might have fooled you too, but that's okay. Now you know what it is and why it's there, because if for some reason you do run into a struggle based on their financial ability, you'll be able to go ahead perhaps and drop out that 1028 and go back to a premium of 51.38. Okay, so again, just a tool for your benefit. Now, on that previous slide, what we did again was we check marked and turned yellow the actual quotes that came up on the original slide itself. By doing that, what we would have done also is at the very top, you see compared check. Once you click on that, it's going to bring up another view that we're going to have in just a moment. But let's say that we discovered in our work here that we got out of line, maybe we do need to drop that return of premium. You would go back here to the edit details. It would take you back to the screen that you populated with the original information, and you would just go ahead and uncheck the return of or the waiver of premium, and it would therefore do that for you. Also, there's a box, and we'll come back to that again later, but if you were deciding to email the quote, you could, or go ahead and print it. But at this time, if you print it, it's going to print everything that's on the page, not just what you clicked, because we really haven't asked the computer to show us that screen yet. So again, let's go to that point where we've chosen them. This is what will appear on your screen. Once you go ahead and hit it, you'll have the breakout of those 4 companies, always starting with the lowest on the left, proceeding as they increase. And again, this was going to be a 20-year product. Again, my screenshot only allowed me to go down to 13 for the size and keep it in view. So it's just my little comparison sheet. Now, I'm giving you guys a full picture of it here as we do it, but I would never put myself in that position in a presentation or closing mode. I'm never going to give them this many options to work with. Probably what I would have done going back here, because I do want to work with companies that provide additional benefits such as living benefits. I probably wouldn't have used SBLI. I probably would have used the American General. I probably would have skipped the Banner, and I probably would have picked up the North American as it's populating here, and perhaps just had those 2 on the screen that I would eventually print as my comparable quotes to show to the client. Don't want them to have too many eggs to choose from, okay? Kind of limit it down, and limit it to companies that you work with for your own benefit, which could be a number of reasons: that you have a relationship developed with the carrier and you want to continue to work with them. You like to focus your business all towards one carrier in an attempt to qualify for the trips that they may have, rather than just spreading your business out. Of course, when you do that, you are creating the situation where you might be losing your competitive edge, because again, the benefit you have working with us here at Messer is the option to work with any of these carriers to put yourself one step ahead of another agent that's coming in the door competitively. I would not think you're going to lose a case for 50 cents a month because you didn't go with the least expensive one, nor do I feel if the benefits provided are better, you would lose a case for even $5 a month in the comparison that I would use by choosing just those two carriers. Okay, so I just picked up the screen again, moved it up a little bit higher. It's the same information, except at the very top again, you can go back to viewing quotes, you can go back to editing, or you can, in this case, what I want to do is I want to print this quote, so I'm going to use it in my package. You could email it. Obviously, if you're working with clients out of state, that might be a benefit that you have to provide that business, because again, with the tool of being able to do electronic application, you don't ever have to physically sit down with them face to face. You could do it over the telephone and with the email process. Again, too, once we go to that page and we go ahead and print it, I'm coming back to just look at again the rider pages and just a reminder of the waiver, the actual rating that we went in with, and that we did not at this time add child units to it. So now what we've done is we've gone over to the wife. And again, on your homework assignment, I asked you to go ahead and work on this. Here's her date of birth. Again, her actual age. And again, kind of we made it in on the border here because of a December birth date. Very shortly, come to the end of this month of May and get into that third or fourth day of June, she's going to be aged up to 34. The key is that you get this application in process, get the application dated, get the application submitted while these dates are relevant so that it's going to hold true. They're not going to push you on, let's say you get this thing done, it's the 18th of May, you get it in the system on the 25th, and come the 4th of June, she's aged up and it's in underwriting. No, they're not going to come back and say to you, you got to do an age nearest to 34. You got it signed in and dated by the date that she was still 33. So that's relevant also for your work. We also determined with her that we were going to target a $750,000 premium. We also want to bring her out to 20 years. And again, I apologize that I didn't give you a definitive part of your homework assignment to work on that. But that's our process here with her. And again, too, we're going to come down. And here's where you see it now. We put in 24. That was actually a mechanical error on my part. I should have put in 25. That was going to be my target. Again, we added that waiver premium. Again, we're coming in at a preferred non-tobacco rate for her. And again, after we have completed it and got to this point, we simply come back down and we hit view all quotes. So, little reverse effect here taking place with the female. SBLI dropped down below American General. Minnesota moved up from position 4 to position 3. North American fell off the map at this point of the 4, and Assurity populated. So again, the client, the age, the ratings are all going to have effect on it, and the better job you do, the easier it's going to be, and the tool does the rest of the work for you. Again, an explanation of what's going on. And now, as you can see, and let's work again with that American General line of the Select Term product, her premium is coming in at $50.67. The base policy itself was $32. The actual waiver of premium, as you'll see, is actually less on her than it was on him, which is why when her quote came in at just under 40 originally, and I had a target, I think we've talked about that before. The client in my original visit wanted to keep their premium in around $100 a month. Knowing that, I went in and added the child rider to her policy for that, and it did populate here, so either I must have copied the wrong screen, but we do have a $25,000 child rider attached to a $750,000 face amount with the protection for disability and with the base policy itself. So again, with that in mind, her 50 and his was right around 50. We were within pennies of the $100,000 that we had tried to target, which is great. Again, we're going to go through the process and select the carriers. Probably what I would do, since I want to keep things easy, even though on the screen right now, North American didn't populate, it's further down in the group, because I chose to do American General and North American with the husband. When I went ahead and chose the carriers, I went ahead and added North American, and I added Trans-American, and I brought this up with both products, and I'll explain why, as we had talked about the importance of living benefits. So we know we got the American General with the benefits for the waiver of premium and with the child, but this is the American General traditional Texas company, the select a term product. This is not the American General Partners product with the living benefits. Okay, key point of information. We've discussed in the past that there are 3 carriers, American General, North American, and Trans-America, that are currently offering the benefits that we were looking for of living benefits. Now, with that in mind, I want you to realize, again, the living benefits that are available from American General are only available with the partner relationship. Excuse me, we're going to talk about that as we close out today. North American does have living benefits, but please note those benefits are not available on term products. Their living benefits are only available on the permanent UL products. Very, very important. But on the screen, I wanted to give you a kind of a little lesson. I brought up Trans-America. This happens to be the product called the Trendsetter Super. As you can see, the comparison was $50 with American General, $65 with Trans-America. Well, that $15 is probably enough for me to say I'm going to lead my client more here than I would here. But the reason I'm bringing it up is you have to be careful when you're doing product selection and what's going on that screen of quotes, because this Trendsetter Super product is not the product that has the living benefits. There it is, Trendsetter Living Benefits. So to provide her $75,000 and have the waiver of premium and have the 25 units of child rider protection and have the living benefits, our premium is $27 more than it is with American General that does not have that benefit. Keep that in mind. And again, North American doesn't have it either, nor does this Trans-America product. Also, I want to bring to your attention, when you get quotes off of the quote tool, you're going to see 2 different Trans-Americas with the same premium costs. You always want to use the Trans-America Family Markets product line. That's the one that's tied directly to your contract through Messer. Not to muddy the information any more than possible, but the other Trans-America that you'll see posted is the Trans-America that was the development from the purchase of Occidental Insurance, was the original company, and Trans-America bought them. So on our quote tool, when you see the 2 different Trans-Americas, you always want to make sure you're leaning with the Trans-America Family Markets. That again is the one that your contract through Messer will be tied to. Okay. Now, when we were working with that tool, one thing I didn't get into a great deal of information on, but it was available there. So I'm going to kind of slide back to another screenshot. When we did her, in the insurance amount, there was a box, determine need, just a little thing there. What this actually is a needs analysis tool. If you would, please, Rebecca, you want to throw up that second question for us for polling? And my question is to you, have you realized that that was there? If so, perhaps you had an opportunity to use it. Again, as the polling questions are going out there, we actually have more people in attendance who have joined us a little later today, so they weren't active in the first poll, but here they are coming in with their answers today. And again, what we'll do at this point is we'll close the poll. And again, the numbers are relatively the same. 60% of our attendees today were not aware or have not used this tool, and 40% are aware that it's there, at least aware of it, or have tried to use it. So let me give you a little quick work on that one as well. Okay, so this happens to be on Thomas, and what it was able to determine for me, because again, I put in some information, I populated off of that 4-page fact finder that we had. We had developed what we thought his total debt was. It was $285. We also had his income that we used with the help calculate. It's here. You'd have to open that up. We plugged in his income, and it came up to show that based on that, with his debt, he would have a potential need of 1.2 million insurance. So again, don't make your work difficult or think that it's too hard to do. There's plenty of tools out there to assist you. We did use the chart that was provided to us by North American that used a multiple times income. Again, this is just a handy little chart. This is only part of the screen. I do want to show you the rest of the screen here, where we would have put in if they had current life insurance, because if they had, that would have reduced the recommended amount of coverage necessary. So even if they had a $50,000 policy at work, this would have came down to just a little less than 1.1 million. If they were intending to put monies aside and work on college, we would have been working with that particular situation. And because we discovered that they had 25,000 in cash assets available to them, it actually lowered this from 1167 to the 1142. So that's how that little screen works, just as a little extra that you can go back to. What we wanted to have you do next week, before we get together, is we want you to take down this address, this website, which is the WinFlex web, because again, this week, all we were trying to do was help you do a basic term quote with a little bit of assistance, as we saw, that was there to help do a needs analysis. Again, with information that you gathered properly on your fact finder, so that you were prepared to bring that information to this work table. But next week, we want to go into a greater depth, because next week, what we want to do is look at the carriers that we'll be working with on permanent products. Those permanent products could be a basic guaranteed UL. They could be an indexed UL. They could be a whole life. You're also going to see when we get to that screen that that's where you would go if you're getting more diversified in the business. That's where you'll get quotes on disability insurance. That's actually where you'll go to get quotes on long-term care insurance. So again, this is going to be a fully structured benefit that you'll have. Please make that note, www.winflexweb.com. I want you to go in there if you can before the webinar and start the registration process. As you're doing that, if you need assistance, certainly call back in. Call back into our marketer department here at extension 819. We'll be able to assist you, or back into our producer support at 813 and help you get registered. But next week, what we're going to do is we're going to go to that website. We're going to take you through the steps of registering if you haven't had a chance to do it by then. Then we're actually going to go to that website and open it up, and we're going to do some more casework and a little bit more advanced methodology. Getting a little ahead of myself too, but I've talked in the past and said, hey, go to our website and get your contractors or carrier contracts lined up. I want you to make sure that you do get that appointment with North American and with American General, and particularly with American General Partners, okay? And by doing so, we'll be able to go over to that site as well and look at the American General site for the living benefits that will have its own separate access to the WinFlex web so that you can quote their products. I also mentioned getting appointed, of course, with Transamerica, because again, they too have those living benefit products. So that's the information I have for you today. Your homework again is to get on the WinFlex web, start the registration process if you can. I should give you one hint. When that opens up, you're going to be able to select carriers, but the only carriers you're going to be able to select are those that you are already appointed with. So even though you might want to select many of the carriers listed there, unless you have an appointment with them, and we'll discuss that again next week, you're not going to get the verification from the carrier to allow you access to their quoting software. But again, we'll get into that in greater detail. Okay, and again, with today's presentation, I will check here quickly, but I don't see that there were any questions that came up. So again, I thank you for making the change in your schedule, for being with us today on a Thursday. I'll be back with you again next Wednesday, and we'll start the presentation on the WinFlex web in some more serious illustrative work to help you work with your clients going forward. Thank you again, Mark Conter, signing off.